Hey, this is John. I want to welcome you to the Options Trading Mastery Week. This is honestly just this is the week that you've been waiting for. This is the dream week. This is really the moment where you shift from, most people are doing and like normal investing and like traditional growth to leverage. This really is sort of the first week where we're going to dive into leveraged investment vehicles, derivatives, because that's what these are. These are derivatives, right? Options are not a stock. They're not a company. They are a financial derivative. And derivatives are where you have higher levels of risk, and they're where you have extraordinarily higher levels of return. It's a double-edged sword, right? And you really, at the beginning, this class, originally when I taught this class, I thought I was going to give this class as like a bonus for people or for clients that got 9 to noon, right? It's going to be like, cool, hey, free bonus course. And it was going to be the coolest ever. But then I was thinking about it, and I realized that like there's so much more that you can't just start with leverage. Like when I was starting out, like I know I have some students that they find my content, they find the education, and then immediately they start trading on leverage, start trading options, start trading on really high margin, which you'll kind of get into later, in more in the crypto space, and they start doing just these really deep level derivatives that are super out there, and they blow up. They just explode because they don't have the experience, they don't have the history, they haven't gone through what you've gone through to get to this point in the implementation program. They haven't gone through the work that you've gone through. They haven't looked at all the stocks you've looked at. They haven't. Anyway, the cool thing is you're not in that camp, and you have the experience, you have the history, and you've been putting in the effort to actually understand what you're investing in, what you're doing, and that's going to serve you really well, and that's going to be really what allows you to succeed, because most people skip over that, and thereby most people fail. And anyway, so anyway, I was thinking about giving this course, as a bonus to the book, and so that's why in the course it's going to have a lot of like references to the book and stuff like that you've kind of gone through. And I was thinking about it, and then I realized that it's a double-edged sword, right? Leverage, options, and derivatives are a double-edged sword. And that's fine, but you have to know how to hold the double-edged sword, right? Like if you look at Darth Maul, he's got a double-edged sword, and he crushes it with it. He does an amazing job. Why? Because he understands how to use it. If most people tried to pick up that thing, they would fail, because it's a double-edged sword, and most people don't know how to use it. So that's why what you've gone through previously, that is the basis, that is the background, and that is what's going to allow you to pick up this double-edged sword, which is options. If you think a stock's going to go up versus buying it versus buying a call, like that call is going to have so much more upside. It's like if you know that like by next week, I had a trade kind of recently on Energy Transfer. They had this just massive plummet to like $4. Then about calls of $4, and then I sold them the next day for like 100% gain when the stock went up 5% or something like that. And that was about a month ago. And then like a week ago, my dad, he has to hold his trades for 30 days. And I told him, yo, buy ET calls, they're going to crush it. So we bought ET calls, and then he had to wait. And he just kind of exited the position for about 200, 300, 350%. Most of it was on 300%, 280% profit. Because it's just, when you're holding for 30 days, you can't get out at the optimum time. But what was interesting is like during the last couple of holding periods, the last couple of days of the holding period, I saw that like this thing was still doing pretty freaking well. And even though I had sold my contracts at 300%, we had the same contracts, but I obviously sold first because they exploded, just because of the volatility. Because so really important side note real quick. The VIX, okay, the VIX at this point, you understand how volatility works. It's really important with options because a really big chunk of options pricing is based on the VIX, okay? I'm gonna put a video below here, but above the masterclass, and it's like the Black-Scholes model of option pricing. Basically, it's what makes options have a price, and the VIX is a really critical part of that. Like when there's a recession or when there's a crash, which is kind of what's happening right now, most of the time you're not really gonna have to worry about it, but right now it was important because the VIX went up a ton, and when the VIX goes up a ton, all options premiums basically go up a ton. So my premiums spiked up a ton, and so I got out, and even though the price had gone up by 40, 50, 60%, I still had sold at a high based off of volatility, which is a nuance that you'll sort of understand more as you get deeper and deeper and deeper into trading with options. And so anyway, I see that it's going to keep on going up, and I just buy like super short term, like 2-week calls on it, and the calls go up like 90% in like a day, or I guess it was like 2 or 3 days, even though the stock only moves like 5 or 10% or something. So anyway, long story short, what options that you do and what leverage that you do, which we'll get to a little more later, but mostly what options that you do is you take the technical analysis skills that you have, and you can predict if there's going to be a move in a stock or whatever, right? And you take that asset, and now you can make 100 times more than you would have made trading the underlying asset by trading short term or long term or whatever, by trading options contracts, right? Because you can control the asset for a fraction of what it actually costs. For a $100 stock, if you pay $1 for an option, thing moves $10, it's like 10% versus 1,000%, and it's huge, and it's really the next step. And what for me personally, and for a vast majority of my students that I teach, it's really what allows you to go from the education that you have into money. And not just like small amounts of money, but big money. And it's what allows, the options, at least for me, they've been the differentiator between my long-term compounding wealth growth curve being, 60 years versus, getting what I used to think would take decades in a span of, months or weeks sometimes. And that's really the big thing with options. Now, I don't want to take up too much of your time, so I'm gonna let you go into the actual master class, and then I'll speak with you at the end of it as sort of some of the big takeaways from it. But I do want you to actually get the education first, so that I'm not just talking about like blah 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 blah. I want you to actually understand it at a really deep level, because you invest your time into learning about options, and that will pay you dividends more so than almost any other investment strategy ever for the rest of your life, now that you understand technical analysis. So with that said, thank you so much, and I will see you in the next module. Bye.